definitely understand that at least some of you aren't. So I'm going to keep this conversation at a pretty high level, pretty conceptual. It's this kind of stuff is kind of like when you look at the stock market. You look at it from far away and it's nice and smooth, more or less. You know, there's a couple of bumps, but you can see some trends, and it's pretty easy to understand. The closer that you get to it, you get lost in the weeds, and the graph that you're looking at is like this. It's a bunch of spikes, and it's scary, and that's the kind of conversation I want to avoid about today. Okay, so a little bit about myself. I work for Freedom 55 Financial. I went to Ryerson for economics. In a previous life before this, I was a manager for a logistics company working with a lot of people. And I find that I took that passion that I have for helping people into finance, and specifically to helping business and small business. Okay? So, the first thing, if this stuff seems like common sense to you, you're doing something right. You know, it's very, it doesn't have to be very complicated, this kind of stuff. I'm not saying that it's simple, but it doesn't have to be like mind-bending. You don't have to much struggle at it. A lot of the stuff is really like common sense. So anytime you're seeing something that you're coming up with and it doesn't seem like the common sense approach, you know, beware. And if it does, then there's a good case that that's the right way to do things. The other thing that's kind of like the, I won't say the warning, but the intro, is that financial planning for businesses, small businesses, large businesses, it's really not that different from doing it on an individual basis. We're all working with people, everybody has similar needs. When you break it down into this world, you're either saving money, you're either accumulating assets, or you're protecting the assets that you accumulate. You know, you can look at it from protection from taxation, you can look at it from protection from the loss of income. It doesn't really matter, but the way I see it, there's two different categories. You're either building something or you're protecting what you've built. So before you start anything, the most important thing is knowing where you are and where you want to be. I forget the company name, but there was two really good talks. Well, actually, there's two guys, one talk from last month about the need to critique yourself. Are those guys here? Do you remember the company name by any chance? Anyone who was here?
Big time design.
Right, yeah, that sounds about right. So what they were saying is that it's very important to critique yourself and always measure how you're doing. Financial planning, no different, right? So when you want to start anything, whether it's a business, whether it's an individual, you have to know where you are. What do you owe? What do you own? What's your cash flow like? You know, do you have more money at the end of the month, or do you have more money at the end of the month? Right? That's an important question to ask yourself. And once you have a good map of where you are, that's when you got to set some goals, realize that what are you doing? You know, you don't want to be navigating blind in this kind of world. If you're saving money, what is it for? Is it to reinvest in my business, which we'll talk about later? Is it long-term retirement planning? Is it to buy a cottage? Is it to protect myself in case I get fired? Like, what am I doing? Right? So it's very important to set goals, very important to know what you're doing. And after that, it just becomes easier. But if there's one takeaway that you should take from here, it's these two. That's the first and second thing that you got to know. Okay, this is kind of the typical stages of a business growth. While it would be awesome, before we go there, how many people are working in a micro company, so 1 to 5 employers, or the owners of a small enterprise, whether you're a sole proprietor and you're kind of just looking for different projects, or you're developing a single product? So a few of you guys, so that's good. I think everybody would love, myself included, if your business growth would look kind of like this, and then very fast it just skyrockets because you landed that jumbo client. You know, you have everybody come on Monday, you have 500 emails, everybody wants your stuff. That's great. It doesn't really work out that way in real life, and this is kind of what business owners expect and see. So new business, that's kind of like the struggling part. I'm sure I can see a couple nods that people have been finding there. Your cash flow is positive, you have expenses, you either have debt that you're trying to repay, or you're, you know, like you're just not making a lot of money and you're just living expenses are really high. Well, your income is low, right? That's the new business. It's just a part of life. That's a part of the risk. It's what makes, I think, entrepreneurship so exciting and so fun to be with. Probably not as exciting when you're there, obviously, if you're at the other end, a little bit more fun, but that's just a part of it. Eventually, most people start getting into the developing side of business. This is the area where you allow yourself to reinvest a little bit in your business. So you can see your expenses start to rise, but really the difference here, the margin, The difference between what you make and what you keep stays about the same until things are going, you're getting traction, you're getting clients. If it's your first business, you're starting to learn from your mistakes. Things are moving in the right direction, and there's a happy ending. So the reason I'm talking about this is that it's important to know what to do when. If you're in these two stages, then looking at executive compensation, looking at like very high-end group benefits or like really comprehensive savings plans for your employees, not the right place. At the same time, if you're on the other side of the spectrum, you've been in the business for 20 years, for some reason your retention rates for employees is not what it should be or not what you hope it would be, maybe you should look at some of the stuff that you could have done a little bit earlier to help you with that. But I'll talk about a little bit more on that in a second. Okay, so a couple points. Like I said before, I don't want to bombard you with too much info, so I'm going to do 1 or 2 points about the newer side, 1 or 2 points about more of the established business. When you're new, cash is king. Your most important thing is liquidity. It's money in your pocket. What I mean by liquid is that it should be within your grasp within 2-3 days. If it's locked up somehow in a GHC that you can't access within a few months, that's not really doing you any favor. That's capital that's not working for you, and it's you working for that money. And that's not the way it should be, right? So anytime you have to lock anything up in the first stages of the business, in my opinion, that's a mistake. I would avoid it at a high cost. I ask this for people when I meet them the first time, what do you think is your best investment? And I get answers like, well, my education. I get a lot of answers like my house, which I think is the wrong answer. And a real estate market aside, your house doesn't generate you as much income as you do. And if you're able to transform that human capital into financial capital, what's the ROI on that? What's the return on investment on that potential? It's a lot better than even 10%, wherever that may be in whatever market, right? So when you're starting up, reinvesting in your business is key. It's the most important thing that you can do. It won't get people like myself paid at the very beginning, but it's very important to you if you want to be successful into the future in the long term. I strongly recommend it. There's a different mindset between entrepreneurs and between employees. Employees have that security, they have that income, and where they should be taking the risk is on the investment side of things, right? And they're able to do so. When you're an entrepreneur, you live and breathe your business. That you wake up in the morning, you don't go to bed until midnight or sometimes more. Whatever capital you have, absolutely should be reinvested. Again, common sense, and I'm sure I'm not reinventing the wheel by telling you all that stuff, but that's a good thing sometimes. Okay, so crucial areas. You should have a balance between the debt repayment and the investment capital. It's always good to have a little bit of cash. There's that decades-old saying, have that 6 months of income. More important, I think, for people with fluctuating income, with people who are struggling to find clients, than with people who are getting that paycheck from work straight away. Make sense so far? Okay. And then the last thing is this concept that I don't think is as well known as that having that liquidity cushion is that the protection of key people in your enterprise. Let me paint you this picture. You have 5 people, small business. One of your guys is your star, whether it's a star salesman who gets all the business, or whether it's a star developer who creates the product and makes your company better. And that's not such an unfamiliar situation. What happens if that one person isn't able to work for whatever reason? Right? There's an impact to that person and their income, but I don't want to talk about what's the impact on the business. If this guy is bringing 70% of your revenue for the year, if something happens to him, how does that impact the business for the next couple of years? Right? How does that impact even paying your overhead? Right? If this is the one person that you really he has the weight of the company on his shoulders, at least in the beginning. So thinking about protecting your key performers, very important at the start of the business. It's probably from the protection side, the first conversation you should have. Once you have a little bit of traction, here's just a couple of points that I found interesting. I went to this group benefits seminar. And what they were saying there is that almost everybody who works at a company as an employee collecting income, this concept of like life insurance, disability protection, RSPs, group benefits is important to them. For employers, they don't think that it's as important to their employees as important to the employees as it is, right? So only 70% of them think that it's only the seventh most important aspect. And it's out of 9 factors, so it's not 7 out of 100. So there's a big gap, right? We all know retention is a big issue. So if you're an employer, you have to understand that I'm the same way, you know, like. Let me think about how to say it the best way, right? You have that drive, you're living in the business, you're taking the risk, you're inherently more of a risk taker. There's a different mentality between you and your employees, right? So don't underestimate the importance of group benefits to small businesses on the impact that it has on your employee retention rate. And the numbers kind of speak for themselves. Okay, so a couple final thoughts. If you have a choice between financial literacy and the perfect product placement, financial literacy is way more important, right? So it's a very good idea. Pick up even some basic books, you know. You hear a lot of negative things about Rich Dad, Poor Dad, that it's really broad. I think it's a great book. I think it does a very good job of defining what an asset is and what's a liability. That and The Wealthy Barber, Dave Chilton, really good, simple, doesn't talk about, you know, basis points and which product and which that. It just tells you, you got to save a little bit every day and you'll be fine at the end of the 20-year period, right? So stuff like that, very important. And talking the talk, understanding concept, understanding finance, financial ratios, even on a basic level, will get you more comfortable standing in front of someone who has access to capital, and it will make you a better expert in marshalling that capital. Okay? And last point, smart and successful business owners have a team. So we had the sponsors from the Ryerson Bank, right? Crucial for a start business. I'm sure if I went around the room, someone would be able to tell me some kind of a horror story, either from their own experience or someone that they know about promises that were made on a napkin, and then there was a big conflict between partners in a business situation, right? So make sure you have that. Accounting, just as important. Why pay more tax than you have to? Once you have a little bit of money, financial advisor, very good, identifying the goals, helping you plan for the future, making sure you get there. And then, you know, once you're going, you have a good thing going, you can get a trust officer if you want to move some money across generations and stockbrokers, all that kind of stuff. At the end of the day, having a team is very good. If you're a manager, you delegate, no different. Okay? So I hope that was useful, at least in some way. If you have any questions, please don't hesitate to contact me. I'll be here walking around. I always love talking about finance and drinking beer. It's two of my hobbies. So the fact that I can come here tonight and put those two together is actually an awesome thing. And then, yeah, looking forward to meeting some of you guys. Thanks.